Good afternoon and welcome to the CleanTech Lithium PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted anytime by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Dr. Aldo Boitano, CEO. Good afternoon to you, sir.
Hi, good afternoon. Very enthusiastic, and I wish you everyone a very successful 2023. I'm joined by our chairman, Dr. Steve Kessler, and our distinguished CFO, Gordon Steen. And let's start. This is a CleanTech Lithium, a snapshot of what we're doing. We have 3 projects. We have more than 500 square kilometers of license areas. The 2 more developed projects are the ones who sit in the southern tip of the lithium triangle, Laguna Verde and Francisco Basin. They both add up for resources in excess of 2 million tons of lithium carbonate. We're drilling in both basins. We control this whole basin, and we expect to upgrade the resource by the first quarter of this year. Again, I just mentioned that they're wholly owned license basins. We don't have lithium projects in the area, and there's no indigenous communities. We sit at 4,300 meters in the case of Laguna Verde and Francisco Basin. Yamara project is much farther north and sits at a 1,000 meter above sea level elevation. And that's one of the reasons the 4,300 meters is one of the reasons there's no major also flora or fauna. We have a very experienced board and management who have developed new major production projects, not only in Chile, but around the world. I'll let Steve introduce himself when that is time, our chairman, and his experience, and also our CFO, Gordon. We listed on AIM on March 17, 2022. We raised between the pre-IPO and the IPO funds, 9.6 million pounds. We actually won an award for being the most successful IPO of last year. And we raised then in November additional, a little bit above the 12 million pounds in November. The breakup of the 2 million tons, 800,000 of them are indicated and measured, and they're all in Laguna Verde, and the remaining are a combination of inferred resources in Francisco Basin and the remaining inferred resources in Laguna Verde. We just released last Thursday a scoping study of Laguna Verde, who give us a first indication of the project, this project value. Laguna Verde is it's a hypersaline lake. We control again the whole basin of this, and that's very important for direct lithium extraction, because by then you can control the hydrogeological variables of the basin, and you can really re-inject the spent brine, 100% of the spent brine back into the reservoir without depleting it. Already mentioned the resource estimate and the grade we have, and again, more than 50%, 53% is measured and indicated of that 1.5 million tons of resource. There's a big geothermal influence. All the drilling we've done so far in the basin has come with temperatures from 20 degrees Celsius and above. And again, as we're drilling, both in those red marks in the map, LB05 and LB06, Laguna Verde 5, Laguna Verde 6, we're drilling in both places. That will come up with an upgraded resource, and we'll be releasing to the market the news of the drilling results and then an updated resource as we go. The scoping study supports this Laguna Verde to be a major supplier of battery-grade lithium in the whole world. Our aim at CleanTech is to be the greenest lithium producer of the world in a combination of renewable energy and the technology, direct lithium extraction, that I'll mention as we go on the presentation. The accumulated calculations of net cash flows, past taxes and royalties is $63 billion US dollars. It will generate over the life of these assets. And there's very attractive economics of the net present value of $1.83 billion. The discount is 8%. And the post-tax IRR is 45.1. The payback is very short as the prices of lithium are high and the margins are also high. The pre-feasibility already started as we speak with Worley Parson, and we're targeting the completion of this in the second quarter of 2023 with further de-risking and more information about this, our flagship project. Who worked in our scoping study? This is some of the background. This study was undertaken by Ad Infinitum, who's run by Marcelo Bravo, one of the most experienced person in the whole world of brine, and worked around in various projects all over the world, and his brilliant team. It's an engineering service company based in Antofagasta, the top mining town of Chile, with a lot of, like I said, a lot of experience. Some of their clients in the lithium space are SQM, Albemarle, Ganfeng, Gallant Lithium, all the major players. They're specialized not only in lithium, but in other types of minerals that are in brine, like potassium, sulfate, and other elements. They provide all the technical solutions that allow us the project to be developed at this stage. They'll be part of the consulting as we go forward with engineering, pre-feasibility, and then feasibility. In lithium in particular, they work in Chile, Argentina, China, and Korea, and elsewhere. In the scoping study, going again with the background of the participants, and the direct lithium extraction capital costs were estimated by Sunresin, a Chinese world-class provider of all the DLE plants that have been built or are in process of being built. The lithium price was estimated by Canaccord Genuity, one of our two brokers, and it's a market-leading broker, as we all know. The mineral resources were signed by independent competent person with all the requirements. His name is Christian Febes, and very respected with a lot of experience. This is all the companies who work. It's a big engineering and teamwork effort between the people who work, very experienced at CLEANTECH, and the people who we contracted for doing this job in all the various fronts. The effective volume of all the mineral resource estimates, it's 73.1 million cubic meters. The average grade is 206 of lithium milligrams per liter. The mass, it's 150. All this information here allow us for a 30-year operational life of 20,000 ton per annum production as a base study. It could raise as we improve the resource, as we drill more, and it could be a different number. But this is the base of all the numbers. Again, new resource will come up as we drill and we expand the projects, and then the present value of the project and everything, economics will change. We consider 23 extraction wells, and here you can see some of the drawings where the plant facilities are. The red shows the well field. The plant facility, it's not seen from the major highway that goes through the property into a pay highway that goes into Argentina. We're doing everything to minimize not only the overall emissions components, but also the visual affecting this beautiful place. So we're doing all that was part of the work we did in the scoping study. The extracted brine it's mixed in a tank before going into the direct lithium extraction plant and the columns where the resin is. And then we have 17 spent brine re-injection wells. 100% of that is re-injected back into re-injection fields, and that will require some pumping. And we're undergoing the further hydrological work ongoing, and not only studies but drilling to really develop this model, extraction and re-injection model as much as we can. We need 66 liters per second of fresh water to work on all the plant. Again, 100% of the spent brine is re-injected, and those 66 liters per second, a portion of it, it's re-injected also back, and it's recirculated. That's why it's so low. And we're working on the assumption that we'll need 2 of those wells for further going into the project. I don't know. You want to go here, Steve? You want to?
No. You just.
No, I'll keep going. Okay.
Continue.
Yeah. And on the process recovery, it's very efficient. The overall number, it's 85% of lithium recovery at the end of the process of the lithium fine region in the brine, and 95% at the level of the resin work. It's a combination of the whole DLE part is it's mainly a mechanical and organic process with resins and reverse osmosis and mechanical evaporation. And then once we have this liquid or eluate in excess of 10,000 parts per million, we go the traditional way of enrichment lithium via all the way into lithium carbonate or lithium hydroxide. Again, remind the market that we produce 1 kilo sample of high purity lithium carbonate that we tested and we certified in Germany, and in excess of the requirement of the industry for making it battery grade. We are working right now on a small unit pilot plant, and we're doing the engineering and already make the purchase order of a 1 ton per month producing plant to further be producing lithium on continuous basis to be provided to the producers of batteries and people who will need the product in the future. This is what I already said, the recovery of the DLE stage, 85, the whole process. This compares to anything between 40-45% of the evaporation ponds that we don't have. And the overall recovery, it's anywhere between 35 and 40, and our is 85. So very pleased with this. We're working again on the piloting stage at the lab scale with a small unit that we bought from a subsidiary of Sun Resin in Belgium, in Europe, and we're doing all the modeling and work, and we expand that into a large unit that will produce 1 ton per month sometime this year. Again, the base case is 20,000 tons per day. So we can get all the details if you want, and this presentation will be shared with you. To validate and adjust all this process, we're going to continue working with ad infinitum and Wardy Parson and specialists in the field to really have the best technology and achieve all our goals of recovery and impurities and a sustainable production of lithium. Like I said, we already ordered this 1 ton per month DLE plant that we're combining with our own technical chemical plant that will be providing the lithium to the market on a continuous basis, or lithium hydroxide or lithium carbonate. I already mentioned some of the water and power. The requirements are a capacity of 23.2 megawatts. There's enough nearby substations with ample capacity to provide this, and we've talked to providers. We're already engaged in initial conversations to have a PPA, that's a power purchase agreement, to have 100% 24/7 renewable energy at the project. The line, and it's part of the scoping study, it's an underground line of the electricity line from the substation all the way to the property, so we don't affect the environment. That's total energy consumption. All the data is there. And what I already mentioned is it's a small supply of 66 liters per second. Both basins have, in particular, Laguna Verde, but also Francisco Basin, have in excess of wells of 300 to 500 liters per second that have been drilled in the past for other studies and other work. And we need a portion of that. And even that number, 66.6 liters, is not fully used because we have recirculation, and then we are re-injecting some of that spent fresh water back. 100% again of the spent brine is re-injected back. Going to the numbers, I don't know, you want to take here, Gordon?
I'll take this one, yeah, thanks. It's probably worth mentioning there was a real in-depth study done on the numbers, both from data from Ad Infinitum's database. They're actually operating in Argentina at the moment and other places. So they had a massive data looking at the various breakup of what would be the operating costs. We were actually modeling 4,500 tons dollars per ton. And we were very pleasantly surprised with the numbers they came up with, just short of $4,000 at $3,800 a ton. Two really main elements: energy that Aldo's already talked about. Again, capacity available, and that energy is based on current energy prices, as mapped by Ad Infinitum. And then on the reagents as well, that's part of the processing process. And actually, the transportation costs, all of those costs are a really detailed breakdown. They had a pretty extensive model which we audited independently. We had independently audited to make sure that we were comfortable with what they were coming out from what they put in. And actually, you see that there's manpower costs are an element of that. We're looking at really about 220 people once we're actually up and running. This is on in the operational phase. We're probably looking at potentially up to double that in the construction phase, particularly with shift patterns and so on. But you're looking at a pretty extensive construction phase, and then moving into the operational phase. And this is about employing local people, training local people, using universities, doing the right thing in country. And for example, when we construct a plant on site, we're looking at five, maybe 8 people from Sunresin being there. The rest are all going to be local people working under their guidance. So pleasantly surprised at the operating costs at just short of $4,000 a ton. That compares very favorably with other of our peers in Argentina and elsewhere. And I think it's in the right place. If you remember, we're modeling the numbers at $22,000 sales price per ton. So you can see that the actual margin on OPEX versus the actual sales price is pretty impressive. The next slide, please. CapEx, I mean, it would appear, it sounds like a chunky number, just short of 400 million, 383. This is, we went through an extensive exercise with Ad Infinitum and them providing data really on the indirect costs on the services based on their database. 4 basic elements, the wellfield CapEx, and the calculation of 23 extraction wells was based on various different modeling done on output per well, how much you need to use, what capacity you have for maintenance, and so on and so forth. So 23 brine wells was what was calculated at an average flow rate there you see of 30 litres per second. And that will eventually provide the 20,000 tons per annum. As Aldo mentioned, the 20,000 tons is the starting point. That's what we're basing the study on, and the potential of the field could be much greater than that. That'll obviously depend on a number of factors as we move through the different stages of the project. But all of the work we're doing now is based on a base case of 20,000 tons per annum of production facility. And that basically would come on in a couple of stages. I'll show you later in a cash flow chart. As mentioned, there'll be brine reinjection wells going back into the reservoir, underground pipelines, and also the 2 wells for processing supply. The actual 2 wells are pretty, that's a low level of cost in terms of the capacity, so less than $1 million for the 2 water wells. Plant CapEx, these are numbers, hard numbers that we've got from Sunresin. So the plant CapEx numbers made up the DLE plant, the chemical plant, which will do the downstream element beyond the DLE process, and then the packaging, storing, get handling, moving it to site, so on, out to the sales point. So all of that has been pretty well extensively determined and modelled, and actually, we've challenged them and cut some of those costs, and then they added on a 10% contingency at the end, just normal industry standard. We think that is pretty reasonable. And you see the services and the CapEx services is part of the ongoing process, getting the electricity supply up and running. That means full tie-in to all the substations, the substation Aldo mentioned, and all the systems and processes. You see firefighting systems in there. That was a surprise to me. This is Chilean regulation. There, mining industry, they do things right. So there's a process we have to go through, which we have to budget for. Indirect costs is really all the costs of the construction phase in the camps, and also you see polyclinical. That's when you've got 300-400 people on site, you have to make sure you're feeding them well and so forth. So that number there is comparable. You can do some cross checks against other companies that are building plants at the moment. There's a 50,000 ton plant being built in Argentina, 700 million. So this is in the right ballpark. We're at 20,000 tons. So we're reasonably comfortable that this is a reasonable number. And I'll take you through later on in terms of how we're going to fund this, what the plan is in terms of funding. You want to do the next slide, please? This is the summary. It's what you've seen in the press release. 20,000 tons per annum, operational life 30 years. We think that is conservative. We think this could go on for longer. It really depends on the additional resource that we're going to unlock through our current drilling campaign. But it's all based on measured and indicated, although obviously we have the inferred, which we're going to hopefully turn into measured and indicated through this current drilling campaign. That's the plan. Construction period about 1.5 years. Some people have said that sounds long. Actually, this is 400 people, putting together a facility, and 1.5 years we think is a reasonable timescale. You could argue it's conservative, but we think that in terms of getting up and running, commissioning, and getting the field on up and running is not unreasonable. Certainly in our industry, where it takes normally 5 to 7 years for mining projects to get up and running. I think we'll go over that again later. Aldo's mentioned the recovery rates, pretty high, 90% recovery rates through the DLE process, which is why DLE is likely to be the future of the whole way the lithium industry works, because of the recovery factors that you receive on the brine. You've seen the capital costs and the operating costs. Probably worth mentioning the lithium price. We used numbers that came from, or independent numbers that came from Canaccord, which they use across all their portfolio. I think it was August or September numbers. The number we used as a base case in the model was $22,500 a ton. That's what they were recommending in September. Probably worth mentioning that the current price is 3 times that. It's the average price, weighted average price in the benchmark mineral intelligence report we received yesterday for December was $68,400. Now, the market expects that to come down as supply and demand curve starts to narrow. But our expectation and other expectation is that $22,000 a ton is conservative, if anything. There's a lot of upside there, and that's where the market's seeing it. That we think that was a reasonable base case number, and you'll see we ran sensitivities around that as well. Cumulative net cash flow is 6.3 billion. That's not to be sniffed at. That's net cash flow after royalties and tax. That's take. And then the payback 1 year, 8 months. Now that 1 year, 8 months is based on $22,000 a ton. If the price is higher at the time we're coming on stream, then that will obviously reduce, assuming all the other assumptions remain the same. We were very pleased at the IRR. 45% is in the right place for a project of this type. In fact, it's in a very good place for a project of this type. And this will result in very good economics for funding purposes, which I'll take you through a little later on. And you see we run discounts. 8%, people wonder why it's 8%. Pretty standard in the industry because of the nature of the business and the long-term nature. 2 or 3 of our peers, which I won't mention their names, have used 8% in their PFSs within the last year. We ran 10% as well. You still see numbers getting towards $1.5 billion of NPV value at those prices. The next chart is on the. By the way, somebody asked for a larger copy of this. You'll see that on our website later on. This presentation will be on the website this afternoon. I'll just run you through some of the highlights. I looked at them this morning again. You see, production comes on stream in year 1. That's probably 20. They're assuming 26. They've taken a prudent view, given the 1.5 years to bring the field onto production and commission the field. And then they bring it on. They're assuming in the first year there'll be a little off-spec production. We're not necessarily as conservative as that, but this is their model, which we audited, and these are reasonably prudent numbers. Operational costs is actually, you see the operational costs are significantly lower than the revenues, and then with some other costs, basically operational costs only represent about 20% of or 15 to 20% of the overall revenue stream. The margins are interesting. Gross margin there above 80%. In any industry, that's pretty good as a starting point. And then from there, obviously, we would take away royalties. Royalties are assumed based on what we presented to when we submitted the CL in March last year. That was before the presidential change. The numbers you see in here are what we put in our admission document, and what we're assuming, at least for modelling purposes, what we go back with in a CL, which we're likely to submit again in the very near future. We've got a good dialogue going on with government about the process going forward on that. Another slide on that later on. The 3 payments you see there, royalties, those are assumed. They're effectively CL payments. One is a straight 3% royalty that comes off the top. That's pretty standard. And also there's an R&D payment, 1.5%, which goes into the local community, and it's another tax effectively. And the remaining annual specific payment is basically, it's a ratchet mechanism as the price goes up and the margin. It's based on the operating margin. You see there, we've got an operating margin in excess of 70%. That's pretty good. And that drives the royalty rate associated with that. The table goes up as the margin goes up, and that margin itself there would have a rate of about 13% in terms of what's being flowed through the model. Obviously, as the lithium price goes up, you're going to get to beyond 80%, and anything around about beyond 85%, you're paying 16% maximum, which in any worldwide industry is not unreasonable. Bottom line is that there's taxes, 27% tax, which we're budgeting for. We'll get offsets during the recovery of capex. But net, I did some numbers this morning. You're looking really at the net take is, just purely royalties and taxes is about 30%. Obviously on top of that, government gets a lot more on top of that through payroll taxes, VAT, and a lot of other taxes that just come from your whole business process. So just looking at the bottom line, the profit after taxes, you're seeing basically that those prices, $200 million a year. If you do some maths, that's a pretty chunky number. And these are very, very strong numbers for conversations we're going to have on the funding going forward. I'll come to that. Those are the cash flow numbers. Happy to answer questions later on those. Aldo?
Yep. We'll move to the next one. Gordon?
Yeah, there's just some sensitivities. What's interesting there, if you look at the capex sensitivities on the top there, if we increase our capex by 25%, the impact on the NPV is not huge. It's effectively $70 million, but capex is not the main cost driver of this project, given the extent of the timeline. And likewise with OPEX, even if the OPEX went up 25%, the OPEX is not dissimilar to the CAPEX. Price is a funny one. They only really modeled 25% increase in price. As I mentioned earlier, you could triple the price as a potential upside. But you can see the price is the main variable, which is not unsurprising in terms of modeling. And it's So and then obviously you look at the way the IRR moves on sensitivities. I think that's probably enough said on that.
Yeah.
Aldo?
Yeah. So we'll go back to the project itself.
Steve?
Yeah. And I'll pass it to Steve. I like a small introduction of yourself, Steve.
Sure. I've been in the mining industry my entire life for major companies like Rio Tinto, BHP, Billiton. I was previously CEO of ASX-listed European Lithium. I've worked 30 years in Chile doing major projects, initially with Escondida, largest copper mining company in the world, and then as the first CEO, bringing Collahuasi from early exploration into construction through all of the feasibility studies, permitting, and financing of that. That was a $1.75 billion project, which was the second largest copper project in the world. I spent most of the last 20, 30 years of my life in project development in various parts of the world. If we go to, my background is in hydrometallurgy. I'm a PhD in hydrometallurgy, so this technology is right on the street as well. Where we are at the moment, we have the results have been declared at Laguna Verde and Francisco Basin. We have current drilling campaigns going on in both, where we'll be extending the resource, especially the measured and indicated, at both projects in the first quarter, second quarter next year. That'll give us a good idea about not just this one, Laguna Verde, and its potential into the future, but also Francisco Basin. As Aldo mentioned, we're proceeding on with the pre-feasibility study. And this is an essential part of the process of project development. It's at this stage that we're looking at all the alternatives which are available to us to design the optimum project. What capacity should it be? What is the optimum processing technology? Where should the plants be sited? What is the best product? Is it going to be all carbonate? Should we be doing a mixture of carbonate and hydroxide? Should it be all hydroxide? All this comes up in the essential stage of the pre-feasibility. And it's when we finish the pre-feasibility, that's where we take the fix as what is the project we're going to bring into production. And then we go into the DFS and we start doing the serious engineering on the project and developing the capital cost for the financing of the project. So that's the flow on the technical studies. So the pilot plant work is essential to provide the process data feeding into the PFS. Now, in parallel to that, we have an aquifer, which we started drilling earlier in 2022. We have to have a very full understanding of the hydrogeology of the aquifer and what happens when we extract brine and when we re-inject brine to make sure it's designed in a way that we can maintain that extraction rate from the aquifer and to re-inject the brine in areas where we don't lead to dilution of the lithium content of the brine that we are extracting. This study is ongoing at the moment. The other main study, which is absolutely essential, is the environmental work. We're already engaged on the baseline work, and in doing that, it is a requirement to conduct that baseline work over 4 seasons. This means over 12 months of collecting baseline data on fauna, flora, meteorology, limnology, rainfall, precipitation, everything. We must collect that data. Then when we have finalized the process in the pre-feasibility study, we then look at the impact of our process on the environment. Once we've completed that, that's the environmental impact assessment. We then have to provide that to the government, and it's reviewed. There's bits of backwards and forwards on that to get the environmental permit, and then all the other sectoral permits that will allow us to go into production. So the key thing, there's 3 parallel streams here. There's the technical process to identify what is optimum. There's a hydrogeology to understand the aquifer, and it's the environmental work all going on in parallel. So we expect to get to a position later this year, probably 3rd quarter, when we actually have the pre-feasibility study complete. So when people say, look, aren't you going slow? There's a lot of work. My experience is that normally a mining project takes a minimum of 7 years from start of exploration to first production. Often it is much, much longer. We're talking from the start of exploration and drilling in 2022 and being into production late 2025, early 2026, which is 4 years, which is incredibly fast for a mining project. So I know a number of people say, well, why don't you go faster? We are going very fast for a mining project. Gordon, do you want to take over?
This one's mine, yes. Obviously, we're a company with a certain market cap at the moment, and we would obviously hope to be a bigger market cap as we go through this year, as we bring new information into the market, particularly resource upgrades and various other information that we're bringing through, including the pilot plant results. But Steve and myself, and actually Aldo, we've all been involved in major funding projects. Between the 3-4 of us, and then there's Jason as well, we've raised in excess of 4 billion through different projects. I've raised 750 million on one project to bid for something in the North Sea. So what's likely to happen is there's going to be a real mix of funding. Since this scoping study was announced, I've had contact from 3 different groups who want to talk to us about different things, including financing institutions in different jurisdictions around the world. So we were always expecting that once we start putting data out, like the scoping study, that people are going to start noticing what we're doing. And over the course of the year, as we move through the PFS, we'll have a far better data set available to share with parties. We already have a data room with some people in, but that's early days. And if you actually look at the mix of where the funding is likely to come from, I'll just walk you through some of the scenarios, because some of them are unique to ourselves. On the left there, you've got the banks. I mean, 400 million is a nice number, but the banks, this sort of project will secure, 2/3 funding, potentially more. Steve said to me yesterday, probably up to 75% based on his information. Probably worth mentioning that Steve put together a $1.75 billion package to fund one of the projects he's involved in, which included 60% debt. And then there was various other funds coming from partners and various other institutions. So we pulled together these sort of structures before. But the banks, there's different facilities you can look at putting in place. And actually, because we're a green company, we're doing things we believe in a sustainable manner. That ticks a lot of boxes. You notice it's HSBC now refuses to lend money into fossil fuels. We're not in that category. We're in that perfect mix. So we'll be talking to banks and financial institutions, and also banks that will, strategic partners will bring us. Strategic partners is where we're going to be focusing a lot of our resources. You've seen the Teslas of this world talking about buying mines. You've seen Stellantis getting into Vulcan Energy. You've seen other companies, Ford, GM Motors. There's international traders have approached us. There's battery manufacturers we've been talking to in early stage conversations. These are big companies where this sort of money is just a pinprick on their balance sheet. And the way they tend to structure things is they may take a small equity stake in the project, not in the company, but the project. Or they may not. The driver is offtake. The driver is security supply of a product which they hopefully believe in. And we'll be sending examples of the product to the various parties. As the pilot plant gets up and running, there'll be literally lithium on the move to potential buyers to test in their own processes. And hopefully coming from that, we'll have some really detailed live conversations. But the structure could involve an element of an equity in the project, bringing banks to bear. When Steve did that project in Chile, that was Mitsubishi bringing Japanese banks into play through their contacts. So effectively facilitating those processes. That's going to be a really interesting conversation as this year goes by. And our hope is that we're getting close to some sort of transaction or deal in the latter part of this year. We'll have the PFS data there, the environmental impact, the pilot plant results, and hopefully a more significant resource, including measured and indicated at a much higher level. So there'll be some really interesting conversations in the latter part of this year. The next one is the US government. This is an interesting one. The Biden administration passed the Inflation Reduction Act about 2-3 months ago, and then promptly gave $150 million to Lilac to develop their product and develop the R&D. They're looking for clean product for their electric car batteries, and 80% of the product they get has to come from clean sources. Chile, we're in the fortunate position. Chile's got a free trade agreement with the US government. That means it complies with the requirements. So we've already had an approach from the US Embassy. We'll be talking to them in the near future, both in the UK and in Chile, and potentially in the US as well. So we see there's real potential there for either direct grants or loans or different funding structures as we move through that, because obviously the US market is going to be a key market for us potentially. Infrastructure funds, it's really an offshoot really of banking, but there are various funds that focus on green energy, so we'll be looking at that as well. ESG funds is another interesting one. There's trillions of dollars sitting in funds that companies are only allowed to invest in ESG projects. They usually require certain certifications, so we've already had a study done which they've reported on, and an independent consultant did a study which our boards discussed, looking at what do we need to do to become certified as an ESG compliant company. And we've got an active program. We're setting up an ESG committee internal within the company, which will have internal and external people involved in that to guide us through a process to see if we can unlock ESG funds. This is cheap money in the sense of funding projects, because it's sitting there looking for a home. And then the balance is going to be equity. It's always something there where we would look to bring equity on at the right time and hopefully at the right share price. We see this as being we seem to have lost the thing. We see this as being a smaller part of the whole funding mix. And Steve's been through projects of that nature. I've been through projects. So The funding of 400 million doesn't phase us. It's part of a process to move through your development phase. And we're looking forward to actually having some really interesting conversations as the year goes by.
Yeah, we've been mentioned through the presentation the how supportive the government is of sustainable extraction. The Ministry of the Treasury Ministry not only quoted in September 2022 the importance of investments and so on, but he specifically on lithium just a couple of weeks ago mentioned the fact that there'll be an announcement soon from the government on creating space for Chile recovering the #1 position as the world producer of lithium that's been taken by Australia a couple of years ago. Before that, it was Chile, and it'll be a space for public company in the sense that Codelco is one of them right now. It's a state-owned company that is drilling and developing in Mariconga Salar, north of us. But at the same time, for private like us, and we've been talking, and Invest Chile has been working with us on the Treasury Department and supporting this, especially because of our sustainable approach, with no aquifer depletion, with a small footprint, with no harm to the environment, and we're doing all the right work, engaging with the local community, not only the indigenous communities who live a couple of hours from the site and 2,000 meters below, but also Copiapó, the mining town where we're working with the university, as it was mentioned by Gordon. Steve, I don't know if you want to summarize the whole presentation.
Yeah. I think that this gives the bullet points about why this is such a good project. I've already mentioned we are in a very short lead time into production. We're using DLE technology, which is going to be the future. We're using Sun Resin as the provider of that technology, who is the leading supplier in the world. We don't have a lot of infrastructure to build. We have excellent physical infrastructure in Chile. Not only that, but we have excellent human infrastructure in Chile. Chile is a mining country. It's a very technically proficient country. It understands the mining industry. And in Copiapó, it is in Region 3, that is a mining district. So no problems in getting skilled people. We are up at 4,300 meters, very little in flora and fauna. There's no local people within 100 kilometers. We don't expect to have any problems in getting our environmental permits in place. The government clearly wants to expand the lithium production in Chile, and it needs the private sector to help it do that. We've got current financing to complete our technical studies to PFS. We're starting to look at where we will get the finance for construction. We believe we're going to be such a robustly cash-strong project that there'll be no problems in getting that finance in place. One of the keys, we know we're going to have a number of people wanting to come into the project. The quid pro quo is if you want offtake, we want to see your contribution to the construction costs and how much capital can be mobilized to come into this project. We talked about this as our aim to be the greenest lithium producer in the world. We're putting our ESG credentials right up front: renewable energy, minimum impact on the visual environment, training and mobilization of people locally. So these are all the factors that we believe should lead to a very successful project.
Mm-hmm. Well,
I think that's us.
Yep, that's us.
Aldo, Steve, Gordon, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. We received a number of questions, both pre-submitted as well as throughout today's presentation. And Aldo, Steve, Gordon, if I could just hand over to you to read out the questions and give response where it's appropriate to do so. Yeah. I'll pick up from you all at the end.
The first of the pre-submitted question is the recent announcement were not reflected in the share price. They asking us, what do you think are the reasons for this? Steve? I think.
Yeah, I think what we've done with the scoping study is really confirmed what the brokers have had in their reports over the course of the last few months. They expected this to be a very robust project, and we've demonstrated, yes, it is. Now, clearly, the share price hasn't gone up because there hasn't been a great deal of people buying into the project. And I think there's still a few concerns out there, which we are addressing. We hope to address it as we move further. The one people said, well, how are you going to finance 400 million? Gordon's just told everybody how we intend to do that. There's still Chile risks. Talk of the National Lithium Company. Does that mean there's space for private sector or not? Are you going to get your operating permit, your CL? We're saying we are in discussion with government. They've said they're very supportive of private sector. When we get that CL in place, that will demonstrate to our investors and new investors that part has been de-risked. People say cash flow is so far away. It's only less than 3 years away. Again, that is very, very fast. There has been concern in the lithium market in general. There's been some of the banks, Goldman Sachs was out there fairly recently projecting a great softening of the lithium price. Lots of other industry specialists say no. They believe there will be some softening from the sort of $65,000 to $70,000 a year, not in this next year, but they expect to see the price stay stronger for longer. We've been very conservative, using a $22,500 a ton price in our studies. So we believe that there's going to be lots and lots of scope for share price appreciation as we put the news out over the course of the next 6 months of our increase in resources, results from the pilot plant, what's going to happen with the terms and conditions of the sale, how we go with potential strategic investors. So I think, people are waiting to see what's going to happen over the next 6 months. But it's best, my belief, is to get in early. The price is abnormally low for a project which is as robust as this, and tremendous uprating potential during the course of this coming year.
Okay, thanks, Steve. The next question is, what levels do you want the share price to be at before you start investing in direct lithium extraction?
Basically, it's totally independent. We are investing in direct lithium extraction. That's the technology we're using. We've done the studies on DLE. To date, we're buying the pilot plant, which is DLE. We're doing our engineering for DLE. We're investing in DLE. That is the technology for us, and that's the technology for lithium brines into the future.
Now, the question is how often, the next one, thanks, Steve, will be received news and information from us in 2023. What is our workflow program? We already went when we went to Laguna Verde. We're currently drilling. We are going to release those results, the initial drilling results, and then the updated resource. We're working with installing the direct lithium extraction and the initial results of that, and all the engineering work on the environmental front, on the PFS of Laguna Verde, the scoping study of Negro Francisco, and much more. All those will be the news. Will be an announcement. It's in our website and in this presentation in more detail.
Aldo, if I can just add to that, that's Laguna Verde, and that's one of our programs. We've got Francisco Basin in Yamara as well. And Francisco Basin, we've got an active drilling. We're drilling now, drilling going well, and we will announce the results of that. It's a 3-well campaign. Second well we re-entered recently, just after Christmas, and we're up and running. So the plan there is, in the early part of Q2, is to announce hopefully a significant upgrade in resource. We've got improving from 1 well to 3 wells, so we would expect to see, measured and indicated, as well as a significant increase in inferred there. And then Yamara, we are hopefully weeks from being granted the licenses. That's going through a final court process. A fairly mechanical process, but it's court process. And then once we've got those licenses, we'll be looking to put down an exploration well. That'll be a really interesting reflection point for the company, because if there's brine there of quality, we think we can do a DLE, and that dwarfs the other two projects in terms of potential size. So Yamara is another interesting factor, and then we'll have to re-look at how we move forward if we get positive results in Yamara.
Yeah, thanks. Will the strategic partner be determined this year? Is another question. You touched that already, Steve. I don't know if you want to reiterate that.
I think no, people must understand. I know a lot of people have been talking about offtake agreements and strategic.
And sorry, Steve, to interrupt you. The next question is about offtakes, and so you can answer both in one. Sorry.
But in terms of timing, and we're talking about bringing in major companies as a strategic partner. Now, most will only start talking when there's scoping study PEA results on the table. We have a number already talking to us who are interested. There will be a number of others that will emerge during the course of the next 6 months. The reality is that most major companies will not take an investment decision until the pre-feasibility study is complete and shown to be positive. That's when the business development technical people are prepared to take an investment decision to their boards for approval. So during the next period, 6 to 9 months, we'll be having lots of discussions with parties, trying to narrow down who is the best party for us. The reality, it'll only be post PFS that we will get an agreement in place with one of those strategic partners. And even then, it will be subject to completion of satisfactory feasibility study and environmental permitting in place before financing will be released for capital expenditure. So there is a process which has to be gone through during the course of this next year. But believe it, we will be in discussion with many parties in the next 6 to 9 months.
Yeah, this combines the 3 questions about offtake.
Just on that, it may be, we say strategic partner, it could be partners. There could be a number that come together. It could be 1, 2, 3. It just depends on the nature of the mix and demand and so forth. Yeah.
This is a question about asking about the price down, the share price being down. Sellers are driving the share price down as far as long as they can by creating fear that the company needs to raise $600 million and won't be in production until a year later than previous guidance. What can the company tell us, its long-term investors, about the expected financial structure? No guarantees, of course. Timing, offtake, memorandums of understanding, financing, and why it now takes 2 years to complete to pilot process, drill 23 wells, and start a modular plant when speed to market is of the essence. We've answered more or less the question, but I don't know if you want to take it again.
No, I think just to wrap it up, we have many financing options. We want to develop what is the right and best financing package for this project. I don't believe it's to the advantage of the company to give out MOUs on offtake, non-binding MOUs on offtake. It's an advantage for us not to have limited ourselves by giving offtake agreements. That needs to be part of the package of discussions on strategic investment into the company. It's not just doing the piloting, doing the pre-feasibility study. One of the lengthy time periods is the environmental studies, environmental permitting, getting those permits from government, and doing the hydrogeological model. So that is going on in parallel to the piloting and the pre-feasibility study. The reality is to bring this project into production within 4 years is incredibly fast for the industry.
Yep.
So to do it less than that and take shortcuts and risk the robustness of the project, we will not do. We need to make this a robust project. And
what does help us is in allowing us to have that speed and realistic speed is the fact that Sunresin are doing that already. It's modular facilities. So 1.5 years sounds long to people, but that's actually very short. It's effectively bringing from China, within 6 months, kit will be on the move. And then it's a question of putting a Lego kit together. It's a Lego piece, and it's But it's a pretty big bit of Lego kit, but it's absolutely doable within the time scheme. But it's the sun resin that allows us that potential because of what they're doing before.
Yeah. Next question is, what is the latest timing for initial drill results from Laguna Verde and Francisco Basin, assay results and granting of the lithium license and drilling there? I'll answer this question. It's a mix of questions. The drilling results, as we said, we'll expect to be finishing drilling within the third quarter. If we have the assay results, those initial results will be published to the market. It might be the beginning of the second quarter. And then we'll have updated resource, all the work that will go into York resource work on Laguna Verde and Francisco Basin. Again, with moving as much as the results allow into indicated and measured resources compared to inferred. The lithium license, again, we've been working with the government. All the permits to drill, to work, everything, all of them, we've been all the time being assigned and being in good terms. But we're talking to the government on that front. And again, the expectations are that everything is positive. There's a question here. It kind of self-responds itself, but we don't know the answer. But I don't expect this answer in the open forum, but I'm interested to know who the large persistent seller is and whatever they are interested in block sale of their shares. We don't know. We will not know ourselves until the end of the month as we have the report, Wickers report on this. Yeah, but it's something that is being populating the forums and on the company. Will it be possible to publish table 12 somewhere cash flow? Yes. Yes, it's difficult to read from the RNS. Yeah. They said it's a specific question to Gordon. So Gordon, CLEANTECH is listed on the AIM. Will you not think London main listing will benefit the company and bring in more investment?
That's an interesting question. I mean, I've done quite a few AIM companies, and I've done a couple of main listed companies, and actually one main listed company I was on, we moved from primary to standard because it was hard work. I mean, it is a different beast moving on the market. It's not particularly cheap to get on there. You have timely to get on there. You tend to be a lot more bigger than we are in terms of scale. You're usually in the hundreds of millions. Comes with different regulatory requirements, quarterly reporting, that sort of thing. Would it bring in additional investment from different? Yes, it would. But it's I think our preference. We've announced to the market that we're looking to do a list again on OTC. We said hopefully by middle of February. We hopefully believe that is still deliverable. OTC will open up a real opportunity for US investors. Some US investors simply can't invest through London, want to invest in US dollars. So I'm hopeful is that by being on OTC, and we'll be talking to US investors again about the company in the relatively near future. Once we're on, we've got some conferences we're attending in the US to tell the story. And we've also mentioned to market that we think actually another way of potentially increasing our growth potential, at least from a share point of view, is through potential dual listing on ASX. Not a decision taken yet, but Aldo's been out there twice. We've been with both of our brokers. We've had some proposals. The board is looking at that, and if it was going to take that move, it would probably do it later on this year, and that would open up a new investor base. Quite a significant proportion of our shareholders already are Australian. I think 35-40% when you look at the numbers. So I think main list maybe something we'll look at in a year or two's time if we believe we've got the scale to do it. But at the moment, we think spreading the wings through different exchanges. We're on Germany. We're on 4 exchanges in Germany now, I believe, as well as Berlin and Frankfurt, Munich, and so I think we've got a PR company now and an IR company working with us really well in Germany, and the footprint is starting to grow. We've seen increased trading, slow but steady. That's the nature of the German investor, is slow but steady. So I'm in regular dialogue with the IR company on a daily basis as they start to increase our footprint. We just released another publication again today. So I think we're very conscious of spreading the message and opening up our shareholder base. I don't know if anything else you want to add on that, Steve.
No. I think for this company, it's got all the potential to have a global reach. Australians are interested in lithium. North America is interested in battery metals, lithium from South America. EU and Chile have signed an agreement to get better ability for Germany to get lithium from Chile. So to be listed in Germany, United States, Australia, gives us a very broad reach.
Yeah, there's a technical question here, or economic technical question. What is the power purchase price assumption behind the energy cost?
Aldo, you missed one. Aldo, you missed one.
I'm just, no, I know, I missed one. I'm just gonna get to that one. The unit cost for energy is US 0.1437 kilowatts per hour. This is consistent with the pricing of similar supply contracts in the Chilean market. The energy price is, again, as the question is considered to be a PPA, and this both include the variable costs and the capital funding by a third party. The previous question is, what do we think on the innovations like sodium batteries? Is they pose a threat or not to our business model within the next few years? Every once and then, news come of different alternatives to lithium, different batteries and everything. But the whole market and all the plants being built and everything is being proven, and it's already being deployed and worked. It's around lithium-based batteries. So yeah, doesn't pose a threat for us. Then the next question is: will you wait for all the 23 brine extraction wells to be drilled before commencing production, or phase them to start generating income sooner? We'll work as we get the permits. We'll do a combination of the two things. We'll be drilling. We need to drill before commencing production. We can't, without having the plans, we can't have the income any sooner. It will be planned of the PFS and the detailed work at the PFS. All these questions will be answered in detail. This is, I think, for you, Gordon. How sensitive is the net present value to the first production?
Not as much as you would expect. Actually, the biggest sensitivity is sales price. You could delay production by a year. I'm not suggesting anybody would do, but if the price is only 25% higher, you're back to the same NPV. So there is an impact as you delay production, but there's a number of other sensitivities come into play which offset that. So I mean, our plan is N25, early 26, as mentioned, and the sensitivities in the model, but not hugely. I mean, there's still pretty chunky numbers come out this, and if the price is anything above 22,500, then it's very chunky numbers.
Yeah. If there's no funding, next question: if there's no funding expected before end of the year, how far do the current cash balances get you?
We as Steve mentioned, we're funded through the PFS, and we raised the money for that. Our budgets for this year have been signed off, and we're working on all of the different activities you've seen. We have the money to do that. Inevitably, we'll be looking, once we're getting towards the end of the PFS, to look to scale up the project, and that's where we're bringing the larger financing in lots of different ways, and there's different ways we can fund the business going forward. We get approaches all the time, so we're very conscious. I mean, all three of us here are shareholders, and Aldo is one of the most significant shareholders. We're very conscious about doing the right things at the right time. Shareholder dilution is obviously something we have to manage, and we're very conscious of doing it in the right way. Yeah.
How many drill rigs? Thanks, Gordon. How many drill rigs at both sites? We started in Laguna Verde. There are two types of drilling rigs. One it's to do the first reconditioning of the hole and the beginning of the bore, and the others are for deeper drilling. Currently, we have one in Laguna Verde, and then the second one is coming up and being prepared to do in parallel LB05 and LB06. And the other one, who originally started in Laguna Verde, is now at Francisco Basin. As we finish Laguna Verde, we'll have moved them to Francisco Basin. Both sites again are within 60 miles of them. By road, it's a little bit more the distance, and we'll have this combination of these 3 rigs helping us to finish the drilling season way before winter. And we're very pleased how things are going up. You can see very good video in our website that tells a lot of these things, and visually you can see how we're working. Next question is: can you elaborate of this possible angle for funding the project? This person, Miguel, asked that he was under the impression that the IRA was negative for projects located in the USA because it made USA-based project more profitable. not sure I understand the question completely.
I can answer that one. I think the Inflation Reduction Act is driving the clean agenda by making funds available to companies and subsidies and incentives for companies to do things in a greener fashion. And that, yes, it does make companies potentially more profitable in the US, but they want product, and they want clean product. So there's an incentive for the US to ask companies like ourselves to provide finance for companies like ourselves, because we can provide clean product into the States because of the free trade agreement. So there's a lot of funds available through that route, and because it's Biden's big driver, it's his big story. So, and there's monies are being made available now. I mean, we mentioned Lilac before. That you can find that in the internet. So. I don't see it as a threat. I see it as an opportunity, and I'm not saying we'll get funds through that route, but it's definitely possible. And we've already, we've had an approach from the US Embassy in Santiago, and we'll be following that up through various different routes, both in London, Santiago, and in the US. Steve, any other thing to add to that?
No, I think the first disbursement from IRA for projects delivering clean metals into the US battery chain was somewhere like $3 billion, all to projects located in the United States. There's more recently been indication that the United States is prepared to release some of those funds to projects outside the United States, provided the product is going into the United States. Now, clearly, as we have our discussions with the Chilean government, there's going to be interesting discussions with the US authorities as to whether projects in Chile would be able to access those funds.
Now we have a long question here on funding again. New funding appears to be a main focus in 2023, some from the bank and strategic partners and other sources. Will there be more funding demands from existing shareholders, or is there a period of no capital raising permitted after the last capital raise at 46-47 pence? What happens if the banks become constrained in their lending ability as interest rates have risen? Is there a potential funding problem in that event? When will be the first cash flow start and the project become self-financing? A lot of questions within that.
I'll have a go. Yeah. I'll have a go. I mean, the whole funding strategy involves a real mix of buttons to press, and we'll be coming back to shareholders. That's not the plan A. I mean, we've got the funding to do the technical studies and ongoing work we're doing, so we're moving forward on that basis. But we'll engage. I mean, is other banks likely to limit funding? There's trillions of dollars sitting in ESG funds looking for homes. That's a simple fact. But you have to tick boxes in terms of certifications and so on. So we'll be going down that avenue. So I'm not particularly concerned about the banks. Interest rates have risen, but they're already actually looking potentially to come back down again at some point. I think that there's banks around the world who have got doors open, and also the strategic companies we talk to have all got their natural banks they go to. They'll bring banks with them. So there's a mix of conversations, and I'm not particularly concerned about the process. It's just a process we're going to have to go through, and it's got to be fundamentally supported by the data we've got. And so that's the first 6 months is gather the data. It gives us a huge firepower to secure the funds. And in terms of cash flows and project becoming self-funding, I mean, it's 1 year, 8 months is when it becomes self-funding. The payback is when you go into profit. So this is relatively short term. I mean, if you go to a bank and tell them that you're going to have a project to fund, which is a 30-year project payback in 1 year, 8 months, you can have a very good conversation with the banks that we're likely to be talking to. It's probably worth mentioning as well, we're not just the three guys doing this on our own. We've got various different advisors through Fox Davis Capital and through Canaccord with an extensive reach. We've got conversations on tomorrow in other jurisdictions. And we've got an ongoing conversation. I talk to Canaccord regularly about the next stage, and they're standing by to open the door. They can pick the phone up and talk to 100 different entities with access to large sums of money. So we gather the data first, we put the story together, and then we have some interesting conversations. So it's it's not something that phases us. It's just a process we have to go through, and I think we'll. I'm really confident about how we're moving forward on this.
Yeah, there's a question here about Chile that I'll take. You mentioned risk is Chilean government signing off and commitment to the project, with national Chilean miner being a risk. Political decisions in these countries is often uncertain. When will government signature be achieved? This will give certainty to project investment. First of all, I would like to say we're not, I'm in Chile and they live here and abroad. I live here most of my life, but 11 years abroad. We're not often uncertain. Bechtel mining is based in Chile, of doing projects all around the world. We're in premier mining jurisdiction. Mitsubishi, 40% of their revenue is created by their mining company, and it's based in Chile, and so on. The quality of the engineers and the quality of the policies and the laws are way and beyond, and can only be compared to those ones in Australia and the US and Canada. We're talking to the government. We've submitted everything. Everything has to be aligned: environmental work, the engineering study. But we hope that engage again in conversations with the local authorities to have that as soon as possible. We just can't say a date, but they're moving forward the agenda again to bring more projects into advancing, and that's we're waiting in the next couple of months of a strong signal towards that. And there's not a national Chilean mining company. There's already one, Codelco, but Codelco on the copper side hasn't given any trouble to the development of many copper mines, producing much more than them. The same now in lithium. Codelco has a national company in lithium. Is the same idea. One doesn't take over the other. The next question is about Sunresin and their technology, and in which way are we cooperating with them to advance towards commercial production. We started in 2017 with direct lithium extraction with a clear view on environmental and efficiency. And of all the vendors, Sunresin by far is the most developed ones, with already producing lithium out of brine in a direct lithium extraction way, and having subsidiaries in Europe for some of the parts. But not only that, they're the only provider who sells you the technology, sells you the resin, sells you a plant, supports you, of course. All the other providers are providers who haven't proven themselves. We know ourselves more. We think we know more than those providers that we talked early on and over the years. But they want equity in exchange of their technology, of something they haven't not proved. Sunresin is the largest resin producer of the world. It's a $4.5 billion company, and we've been working with them. They come visit us. We've sent samples. We're exchanging information, lots of information in the scoping study: mass balance, water balance, energy consumption, recovery rates, all the flow, everything. We briefly touched on this presentation, and you can read further as we put it on the website. It's provided by them, and we're very pleased with doing that. On our end, we have top world experts on brine and lithium in particular, people who we've hired on a permanent way, who have worked in Escriema or Bemarde, and people like we mentioned, like Ad Infinitum, being consultants. Now the question, it's already been kind of responded. Are you talking to major companies to partner with, as in the Teslas, the Volkswagen, the Daimlers, etc. of this world? If we have a preferred reference in terms of an automaker or battery manufacturer, Steve, I think this is yours.
Yeah, no, I think the potential types of companies and the numbers of companies therefore for us is very wide. Clearly, we do want to associate with one of the major companies, or more than one of the major companies. We already have discussions ongoing with a number of major worldwide known names, both as trading houses, cathode manufacturers. We will start talking to motor manufacturers in the future. We are at the moment neutral as to what type of company, as long as they need our lithium and we can structure a transaction which is favorable to our shareholders, in fact, favorable to both parties as a long-term, strong relationship. And we will continue those talks in the next 6 to 9 months.
Yeah, what will be a potential output expansion at Laguna Verde be on a multiple of 20,000 tons per year? We don't know the number exactly, but it's not a multiple by 10 or 20. It's the projects have been built anywhere from 10, 20, 30, 40, 50. We'll know more as we expand the resource and we go forward. Is there any potential increase in output modular? Yes. Yeah, the way DLE and the plan itself and the work with Sunresin, it can be a modular, and it can be funded from cash flows. Yeah, it's something we've evaluated. Again, this will be addressed at the PFS level. There's just the question of Sunresin. Sunresin uses evaporate process in other implementation of their tech in China. How does Sunresin have assurance they can forgo that step? There's two things very important. When we talk evaporation ponds, it's not just one pond. It's a series of ponds, 7, 8, 9, that take a year and a half to build. It's a batch process. Then to go through it, the brine and concentrate and precipitates and everything, it takes 315, 325 days to concentrate to over 10,000 parts per million. So you can go all the way into lithium carbonate and hydroxide in a chemical way. But when we're talking of Sunresin in very, very low grade lakes in China that have 5 parts per million, 80 parts per million, what they're concentrating the lithium in just one pond. There's one pond concentrating the lithium before going into the DLE stage. It's not the same comparison. We don't need that concentration because we have much higher grade. The plant being built in Argentina in a chemistry similar to us doesn't have that. So it's not the same thing. If we ourselves have somewhere of evaporation, a forced evaporation via sun or via gas or via electricity, something that the PFS will answer. It's not the same comparison of a series of evaporation ponds, and all that process was very lengthy in time, big footprint. It's different, and we have that assurance with Sunresin. Actually, we have a long conversation about that internally, and I think we'll put something in the website fairly soon to have it so you guys can see it.
Aldo, Steve, Gordon, thank you very much. You've been very generous with your time, and I think you've actually managed to address all the questions from investors. And of course, the company will review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Aldo, could I just ask you for a few closing comments?
Yeah, we are the cheapest available stock out there for the amount of resources, or the more undervalued company, and we consistently use the money we've received to put it in the ground, to put it in the development of the project, to put it on the engineering. We sit again on a very prestige part of the world with a lot of infrastructure, a lot of professionals who can deliver projects from start to being developed, not only from Chile but also our board, as Gordon's and Steve here present, symbolize that experience. And we just very, very, very interested in you guys coming on board, or the existing shareholders expanding our world around.
Aldo, Steve, Gordon, thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few minutes to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of CleanTech Lithium PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you all.
Thank you.